May profits be upon you. Welcome to another weekly market forecast. We're looking at the S&P futures, the S&P 500 futures. Okay. Uh, First, let's establish a bias. All right. Which way is it going? Well, what we can see is we have a swing high here, a swing low here. That seems pretty obvious. We got a break of market structure in that order. All right. We got a high, higher low, higher high, higher low, higher high. Another break of market structure. So we're concerned with this area right there because that is the most recent price action. And we are bullish on the monthly. We have a break of market structure here, a bullish break of market structure. We have a swing low and the high here, fractal high. What happens now? This becomes our natural area of demand. We wait for price to come back inside of this natural area of demand. I got a little arrow here. All right. And we look for a place that price could find support for higher prices in the bullish leg from here to here. Right. So let's look in that bullish leg and see if we can find an area that the price would find support for higher prices. Well, we have a bullish fair value gap right here. It's untouched. Price comes back down to that bullish fair value gap, and we look for price to form a break, a bullish break of market structure here. All right, on the lower time frames. We also have another fair value gap here. All right, and price could very well break past this one and then bounce over this one. We don't know. We'll see. But I like this area because it's intersected by the highs over here. I like this area. It is a breakout area, and the market loves to come back and test those areas. Okay, so I am looking at this area here at 6,227, 6,227. All right, as an area that price could use to break out to, but break out higher. But let me also mention that that area is this is on the monthly. It's going to take a little while for it to get there. Let's go to the weekly. And what do we see? What is our bias on the weekly? Swing high, swing low, and break of market structure. That's what we're looking for, right? Where's the swing high? Well, the swing high is up here because it's the highest point. Where is the swing low? Right here. Didn't go past this low. Once it hit this low, price just kept going up. Where's the break of market structure? Right here. Oh, I didn't mean to do that. I meant to put a line there. Right here. Once we closed past that line there, we have a break of market structure here. So we are bullish. Got it? Bullish break of market structure. That's it. That's it. Now, what does that mean? This then becomes our I'm draw a better box this time. This then becomes our area of natural area of demand. From that swing high to this swing low to that fractal high. Period. End of story. Okay. And what are we looking for? We're looking for price to come back down. Oh, why is this line still there? We're looking for this line for the price to come back down into this area of demand, natural area of demand, and find support for higher prices. Okay. Where would that area be? Well, let's look at this bullish fair value gap here on the weekly. This is a bullish fair value gap. All right, we can move this. And this would be a great area for price to find sweeping liquidity here and coming back into the internal range liquidity here from external range liquidity. We took the external range liquidity from up here, and now price is coming to an internal range of liquidity to continue higher to an external range of liquidity, and so on and so forth. But we are bullish. All right, that's it. That's is that easy. All right. Now let's go to the daily, and we're going to do the same process. All right. Where's the swing high? Where's the swing low? Where is the break of market structure? Well, this is the swing low because it took liquidity from this low. It is a swing low, and we have a break of market structure once price breaks that high. Great. All right. We have a higher high, higher low, higher high. Uh-oh. We have another higher low for a higher high. So this is the area that we're going to concern ourselves with, right? On this daily time frame. Let me draw proper lines. That high was overtaken by this close above that high. All right, this ain't a wick above, it is a close above. So I like that as a high, and we have our swing low here. All right, and we have the fractal high there. And what I like to see is this natural area of demand. I'm looking for price to come back into this natural area. That's an arrow here, back into this natural area of demand to find support for higher prices. Let's take a close look at that. All right, where are we going to get that higher prices from? Well, we do have a fair value gap here that was used. When it's used like that, I don't like to use it for an area of where I want to enter a trade. What I do look at is the low that's inside. I'm looking for price to take that low as a discount array, all right, and find higher prices from there. So this is my draw on liquidity for sell side liquidity. All right, boom, there we go. And I would be looking for price to find that, give us a bullish break of market structure on the lower time frames so that we can head towards that high for buy side liquidity and external range liquidity. I don't know what happened there, but this is what I meant to draw. Don't judge me. Okay. So this is what I'm looking for. Boom. Okay. That's what I'm looking for, the S&P. Okay. So it's buys. Be patient on the buys. Be patient on the buys. Don't just jump into buys here. Hey, I'll take a sneak peek on the 4 hour. I'm gonna show you something. See that structure? All right. Remember, this is a daily fair value gap. All right, that was used. All right. So and then it was used to great effect, breaking this high, breaking, let's see, breaking this high, okay, and making a new high here. All right, price pulled back. We took out this low here. Sorry, we took out this low for liquidity, and you see price moving up, right? But what do we have here? Do we have a headwind? Yes, yes, we do. Bearish fair value gap. Boom, right? Right here. And price is contacting it right now. Do I expect it to hold? I don't have an expectation. I'm going to react, period. End of story. If I can just, yeah. All right. So let's take a closer look at that. And what I'm going to show you is there's also these buy to sell wicks here. All right. That is an area of demand. Supply right there. Right below is the fair value gap. I like this area to push price back down. I do like that area. If the fair value gap fails, then it can be inverted and we can see price use it as support for higher prices. So there's a couple of things to look at with this 4 hour fair value gap. All right. Keep that in mind. Now, what I want to show you here is this line is a change in the state of delivery. The buy up before the strongest sell off. So what we have here is this, boom, boom, and I'm looking for price to continue lower down to this sell side liquidity. Yeah. So this is it intersects that fair value gap. That kind of gives it like two plies strength, right? Two confluences of resistance. Got it? Where's that CISD there? All right, so I'm definitely looking to see how things develop here. I don't think we get past this area, this where the buy to sell wicks are, because this is an area where supply is, and I think we are going to be coming back towards that low and these lows. That's where I'm at. I hope you find that helpful. If you do, make sure you hit the boost button and or the like button, and make sure you leave a comment. I like to talk and chat with my viewers. I will see you in the next video. Thank you for watching. Hey, don't forget, I have other videos that I put out for this week ahead. Gold, US dollar CAD, pound USD, euro USD, and US dollar index. Make sure you go check those out. I'll see you in the next video.